Okay, perfect. So let's get going here. Welcome to the webinar, everyone. First of all, Happy New Year. So glad you could make it today. So let's just dive right into it. So, first of all, the reason we are here, let me ask you, first of all, does this sound like you? You are juggling multiple priorities. Maybe you have a full-time job and you have a family that you have priority for, and you really like trading Forex. However, you feel like you don't have enough time to trade, or when you do trade, you seem to miss the best trade setups because you're not in front of your computer. So you go back and you look at your charts and you see all these great setups. However, you were not at your chart. So you could have identified the trade, you could have taken it, but you were not there. So if this sounds like you, this is what this webinar is all about. I find over the last a couple of years that I have been teaching, so I've been trading for about 8 years or so, and in the last couple of years I have been teaching. I find that I hear a lot of this, that when I give someone my course, the problem is they understand it, they can identify the trade setups. However, we don't have enough time in the day to actually trade, because most of the folks that I work with are not full-time traders. I am a full-time trader. This is all I do. So I do have time to spend in front of my screen to look at my charts. However, that's not the case for everyone. And it's only now that I'm a full-time trader. When I first started, I wasn't a full-time trader. Of course, I couldn't afford to be. I needed to make a livelihood, and I had a business, I had a full-time business at that time, so I couldn't be there looking at the charts. So that was a problem that I had faced as well. And that's why once I got my trading on track, I did go into full-time trading, because it was easier to do it that way rather than trying to juggle it while I was working. So if this sounds like you, if that's the problem that you are facing as well, then you are in the right place. So what are you going to learn here today? Things that I'm going to talk about is I will share with you a simple Forex trading strategy for a busy lifestyle. So for people who are not able to spend the entire day in front of the screen, this is a very good trading strategy that you can use. We'll also take a look at how you can spend about 60 minutes a day trading in front of your charts, and you can still be profitable. Then we'll take a look at how do you effectively scan the market. So if you're going to restrict the amount of time you are spending in front of the screen, how do you then find the best trade setups, and how do you take advantage of those? And lastly, I'll talk about how can you double your profits with a simple trick and cut your trading time in half. So a little bit about me before we get started into this. I'm a full-time Forex trader, have been trading live for about 8 years. And in terms of my background, I have a couple of MBA degrees from Cornell University and Queen's University here in Canada. My background is actually in computer systems, so I have IT, and I used to have an IT consulting business back in the day. And then I also worked in the banking financial industry for a while. I worked with one of the largest banks here in North America. I have a family, and right now I trade full time. This is something you may have heard before about me, a little bit about me. However, what I don't always spend a lot of time on is this. I have a very, very busy life. I have a couple of little kids, two beautiful girls here, and my husband there, of course. This is what I have found. When I first started trading, it was all about, hey, this is so exciting. Let's sit in front of the charts. I was married at the time, but I had lots of time in terms of when I first started trading full time, I should say. Because I didn't have other responsibilities. The family wasn't a big responsibility. My husband could take care of himself, and I just had to worry about myself, and then, spending some time with my family, my husband, but not so much about the family overall. But now I find we're having two little kids, it is difficult to find the time to be in front of my chart. So even though I do trade full time, the amount of time that I can spend in front of the trades now versus what I could do before when it was just my husband and I is it's different. I'm not able to, when they come and they want something, I have to be there. I can't just tell them to go away and not be interrupted. It's just constant interruptions. So over last year or so, I've been looking into what I can do, how to change my own trading so that I'm able to do some of the fun stuff. So a lot of times we talk about trading in terms of, hey, how much money can we make? But in this case, I am finding myself more wanting to spend time doing other stuff, more of the fun stuff than really, sitting in front of the computers. So this is a little bit of a quest I've been on over the last year. I started a trade room last year, and I found it was really difficult to do because it seems like every time I woke up, my kids just decided to wake up at the same time, even though I was trading London time. So for me, it was really, really early in the morning. I couldn't even do that because somehow they just knew that I was up and they wanted to be up at the same time. So I just found it really challenging in terms of the sleep patterns and just kind of dealing with other things like taking care of the kids. So I have been, over the last few months, I have been really focusing on what can I do to really simplify the trading. So this is sort of the gist of all of that. So bringing all of that together, what I have really focused on and how I'm starting to use this. Okay, so when you first start trading, the first thing we need to know before we take a trade is where the market is going, right? And to understand where the market is going, we have to look at what the market has done. So market always leaves tracks. And that's what first thing we are going to do in the morning before we take a trade. Look at what the market has done so we can look at what the market is going to do. And for that, I use the daily charts. So this system really has two components. So we look at a larger time frame and a smaller time frame within that. This is what I found to be the simplest thing that I could do and trade off of without really getting into any kind of problems. So the first thing we'll be looking at our daily charts. I know as day traders or short-term traders, not everybody wants to look at the daily charts, but I have found them to be very, very important in my trading. I consider myself a day trader. I am by no means a longer-term trader. It used to really actually create anxiety for me when I would trade over longer term. However, I have found the daily chart, looking at the daily chart has changed my trading. It has made it a lot more simpler than it used to be. So what I look at is the daily candlestick. So I would look at what happened the previous day. So 5 p.m. Eastern close for the New York time zone. What happened with that candle? And based on that, that gives me the market direction. So that's what the daily charts are for, looking at market direction, providing us the market direction. So this helps us either stay with the trend or they will tell us when the trend has changed so we can go with that. So what exactly are you looking for? So we're looking for strong bearish bars where the market has opened high and it has closed low, or we're looking for strong bullish bar when the market opens low and it closes high, or we are looking for some rejection patterns like pins when the pins start getting bigger or when the candlesticks start getting smaller. So that's compression. So let's take a look at it. For example, here's our chart. We have our support and resistance line right here. So we see that the price is moving up and then gets into previous resistance area. This is where we are looking to, let's say we start over here. Once the price gets here, we're looking to sell. So let's say we're not in a trade. Once the price gets rejected here, we get a nice daily candle here, very, very bearish daily candle. Once we see this bearish candle here, we know there is previous daily resistance over here. So we are going to we're going to wait. We are waiting for the daily candle to close. Once we see that it has closed bearish, we are looking to go in that direction. So the daily charts gives us the direction to trade in. We get a nice bearish candle here. We look for a bit of a pullback, and then we are only looking to sell after this candle closes. We're not looking to buy. And this is where half of your trading trades that you could take will be tossed out, because we're not looking to go counter trend in this case, because we're trying to simplify our trading. Even though you can make money counter trend trading, however, because we're trying to simplify everything, we're just looking to see where are the best trade setups. And in this case, we are looking for direction from the daily chart. So once we see a good daily candle, we're looking for a pullback. So another thing to understand is that just because market is dropping doesn't mean it will continue dropping. It is going to pull back before it drops again. And the reason market pulls back is because all those people who have sold this candle, people who sold from here or somewhere along the way, they are going to take their profits. So we're not just going to see continuous drop. We will see a pullback. All those people closing their trades, which means they're buying. All those buy orders coming in will push the market up. And once those trades have been closed or partial profits have been taken, we can then enter into a trade. And I will talk more about how to enter into a trade. Right now, all we're looking for is market direction. So we use the daily chart to see market direction. Once we have the market direction, so in this case, once the candle closes strong like this, we look for price to go down the next day. And as you can see, price goes down here. The following day, price goes down. As long as we keep getting strong daily candles, we keep looking for price to go down. And then after this candle closes, we're still looking for price to move down, and it does. And now we see an indecision candle. As soon as we see an indecision candle, we are going to stay out of the market for the next day. This is not the pair we are going to trade the next day, because at this point, we would not know what direction price is going to move in, because now we have an indecision candle. After an indecision candle, price can move in whatever direction, we won't know. So we're going to stay out of the market and maybe pick another chart, another pair that you can trade. After this, we have to wait for this candle to close. Once this candle closes, this is a very strong bullish candle, then we'll start looking for bullish trades. In this case, we look for a pullback, and then as you can see, price goes up, another pullback, and then price goes up, another pullback, and price goes up. So here we see, in this case, so one of the things I mentioned is we're looking for pin bars to get bigger. So if you see a big pin bars or a big pin bar at the top and we are looking for a bullish trade, that's not a good idea, because pin bars or wicks show rejection. So if you have wicks in the bottom and you're looking for a bullish, looking to go long, that's great, because that shows that the price is rejecting the bottom. It's not wanting to go lower, it wants to go higher. Perfect, that's great. However, if you start to see big pin bars big long wicks at the top, now that is concerning, especially when you have the candle bodies getting smaller. See how this green candle body is much smaller than this one? That's not a good idea, because that would give us pause. In this case, we have a longer wick on the top than we do in the bottom. So I would be careful with trading this one. So that would not be a good trade setup. So this is when you go flip onto a different pair and trade that. So this is where we are not going to, this tells us that the market, there's no clear market direction. All the way down here, we had clear market direction showing us that the price is willing to go lower, and we could go with it. But once you start seeing something, Once you start seeing something like this, indecision candles, or you start seeing longer wicks on the top, this should give us pause, and this tells us that market is not clear on the direction it wants to take. So we would wait, and sometimes we will lose the trades, because in this case, for example here, this is a nice pin bar. We would expect the price to go down, and it does go down. However, if we did not recognize this support level here, we could lose our trade. So we may be able to get out of our trade at break even, or we would or it would be a loss here. So know that every system will have loss percentage, certain percentage of trades that we will lose, just because even though the setup is correct, if we did not get out of trade, however, this is a daily chart, so we should have been able to pull our trade out of this. However, for whatever reason, let's say we were not able to, so that would be a loss there, right? So after this green candle, our direction has changed, the market direction has changed, and then we would be looking for bullish trades. And as you can see, the price starts to move up. So the whole point of the daily chart is just to get market direction. So we're looking for 5 p.m. Eastern New York close. So if you are in a time zone, for example, London, you're just looking for a New York close, so you can wake up in the morning and do this and look for at what level the price closed. Or if you are in North America or in Asia somewhere, you'll be awake to see where the 5 p.m. candle closes, 5 p.m. Eastern, so New York closes. Once the New York closes in Asia, we're looking for a pullback. So in the evening, we're looking for a pullback. And then when the London starts, that's when generally the price will tend to start coming down or going in the same direction. Generally, we see more pullbacks in Asia and then drops, or we'll see the trend go in the direction, in the previous direction, in London session. Sometimes, however, when it's really, really strong trend, it will just drop. For example, this one here, price closed here, and then it just took off. And that happens sometimes. So in Asia, the new trade will start and it will continue on. So that's why it's nice to see what the direction is. Look for a pullback. And sometimes if you don't get a pullback, then we'll have to get into a trade when we can find it. But or go to a different pair to take a trade. So again, just looking for the daily candle for market direction. So next thing we want to do is next thing after our candle closes for the daily, we are looking for 1 hour. So I mentioned that we would look for a pullback, and the pullback would be on the 1 hour chart. So this is when we switch to a 1 hour chart and we look for our pullback. So before we switch to the 1 hour chart, the way I look for a pullback are two different ways I look for a pullback. One is 50% pullback on the candle, and the second is about 23 to 32% pullback. So this is where the Fibonacci's come in play. So you can draw your Fibonacci here, and if you see that the price stays below your 23% retracement level, that means the price is very, very likely to move in that direction. And this is the case when the price is very, very strong. The trend is very strong, and generally we see the price move in that direction in Asia. So if the price stays below your 23% retracement Fibonacci level, that's when you know that the trend is strong and is likely to continue. So those are really good trades to take. So from the 1 hour chart, we would look for pullback. So either we are looking for a 50% retracement, or we are looking for the 23% retracement, 23 to 32% retracement. So basically, it just means that the price is not willing to pull up much higher, which is a good indication that the trend is going to continue. Another way to look for a pullback is through pivot points. I really like using pivot points. It's one of the few indicators that I do really like. And the reason is because it kind of overlays your Fibonacci into the pivot points. They're drawn automatically for you. Don't really need to do much about them. So in case of a strong trend, you will see that the price will stay below your pivot. So when we're looking for pullback, if you have pivot points, you would just look for the price to pull back into the pivot point. So that will be the green line. If you're using my pivot points, that's the green line on your chart in your pivot. That's called the daily pivot. So you're looking for price to pull back into the daily pivot. And if the price stays below the daily pivot, then you're looking for price to go lower. So that will be another criteria. And other things that we are looking for in terms of 1 hour chart. So once we see the pullback, the next thing we need to see is a rejection pattern. So this is one of the rejection patterns. So it looks like I'm missing a couple of slides here. So this is a pin bar. So we're looking for a rejection pattern, and rejection patterns can be any of the common rejection patterns from your price action. So this could be the pin bars. I love trading pin bars on a 1 hour chart. If you get a nice pin bar at a nice support and resistance level, so we would take the direction from a daily chart, and then we would go to 1 hour chart and mark our support resistance line, and then we are waiting for, and also this is where your pivots will show up as well. So you're waiting for price to pull back into the pivot. Once the price is pulled back into the pivot point or your support resistance area, next thing you're looking for is a trade setup. We don't just enter into a trade because there's been a pullback. We're looking for a setup, and then we enter into a trade. So one of the setups would be a pin bar. So in case of a pin bar, this is what it would look like. We have a long wick, which is the rejection, and we would have a small body. This is the bullish pin bar, in which case we're looking for the price to move up. So we would place our stop loss below the pin bar, and we would either wait for 50% retracement here, or we can just enter right at the top. This is our bearish pin bar, long wick to the upside here, and then a small body. This tells us that the price is likely to move lower. So we would we would place our stop loss up top here, and we can look for a retracement on this and then enter our trade, or we can enter a market order and just get into the trade. Pin bars are one of my favorite rejection patterns to trade on a 1 hour chart. Other things that I found to be very, very helpful, or the ones that tend to work quite nicely, are double tops and double bottoms. So if you see a double top setup on a 1 hour chart, that tends to work quite well as well. Double tops, triple tops, and then we have what else? So we'll actually go through some examples. So I'll show you the like morning stars, evening stars. Those tend to work quite well as well. So we'll go through that. So let's take a look at some examples. So we talked about pin bars on 1 hour chart. So this is Euro US dollar 1 hour chart. As you can see, I have my pivot points here. So price pulled back up, and then this is actually into R2. So price did not stop at our daily pivot. Price went up, and then we see this nice pin bar at R2 level. When you see, so it looks like this was a big move up, because we did see price go all the way from S2 to R2, which is quite a large move in this case. And once the price gets to R2, so if you see price go all the way from S2 to R2, generally it will tend to reverse there, because that generally your average daily range has been met, and then price may come down after that. So in this case, we see that on the 1 hour chart, we get a really nice pin bar. Once we get the pin bar, we can take an entry right at the close of the pin bar if you like, and then place your stop up here, up above the pin here, and then you enter short trade. So in this case, as we can see, we continue on with the trade because we get nice big move right off the bat, and then we see price moving lower, and here we go, price comes into our daily pivot, and that's when we start to see engulfing candles, price starting to kind of go sideways here, so you can exit your trade anywhere over there. So that's one example. So 1 hour chart, in this case, we got about 96 pips in the trade, which is, if you're trading one standard lot, it's $960. So one of the problems that I find when you're trading a smaller time frame is that you have to spend a lot of time in front of the computer. I do like trading a 5-minute chart, and I talk about that, or I have talked about that a lot previously. The problem with the 5-minute chart is, one, there's a lot of noise. You're not able to see all the price. Sometimes it will look like, oh, it's a downtrend or an uptrend, but once you zoom out, you will notice that it was just a counter trend trade within the larger trend. So it does create a lot of noise, and it also creates a lot of excitement. I find it's kind of like going to the casino and, oh, you see all that flashing lights and everything going on around you. It just kind of sucks you into that. So I find when you're trading from a 5-minute chart, there's a higher likelihood of entering into trades that shouldn't be in, and I have done that a lot. And from time to time, I do get sucked into that because you're looking at the chart and all you're seeing are the trees. You're not seeing the forest. So you see a great trade setup and you just want to get in because, oh my God, the price is moving and you're getting left out. So you just want to be in the trade. And what I find is that it'll just go 10 pips or 15 pips or 20 pips in your favor and then turn around. And by the time, if you're not quick with your exits, you could just wait for a price to turn around, and it would never turn around and just goes against you. So where you had an opportunity to close your trade, you didn't, and then you sit there and you get mad at yourself for not managing the trade properly and not getting out and taking a profit when you had the profit in the trade. So stuff like that, I find the 5-minute chart helps. It promotes over trading, and that's one of the problems that we tend to get into is over trading. And I find a lot of people lose money because they're over trading. If they had just taken 1 or 2 trades a day, they would not have lost money. They would actually have been profitable. So I look at, I mentor people as well, and folks that are more experienced where they have been trading live. So I look at their statements. So they show me the trades they are taking. And I find a lot of times, like the first couple trades would be great, and then they just overstayed their welcome. Either they stayed in the trade too long, or they just took too many trades. So the first trade is okay, second trade is okay, and then it just kind of goes downhill from there. So that's another tip: is don't overtrade. Just take 1 or 2 trades and just stay with that. You could actually, that's one of the things I found. If people cut out half their trades, they would be 100% more profitable. So it is crazy. You could actually, your results will be double if you cut out half of your trades. Something to keep in mind if you're trading live. Here's another example of a pin bar trade. This is again on a 1-hour chart. As you can see, we have the price going up. Price comes into a support and resistance area at the 50 level, and we get a nice pin bar. And after the pin bar, we can either look for a pullback, or you can take a trade right at the bottom here. Stop loss goes above the high, above the wick here. Give it some room for the trade to breathe, and you just go in with the in the direction, of the pin bar. So we're going down here, and we keep on going till we actually, in this case, this was where the move took off, where the price exploded, and we see that the price comes back into this support level, and then we get a big engulfing candle here. Once we get that, time to exit the trade. So in this case, there were 89 pips in the trade, or $890. Here's another example. This is a double top. This is Euro Yen 1-hour chart. So as you can see, price was moving up, and then we see price come to a resistance level, and we see a double top here. This is the first one. This is the second. Nice engulfing candle, which gives us our entry. So this shows that the price is not willing to go higher. So we would put our stop loss above the pins here. Make sure there is some room for the trade to breathe. We enter our trade right here, and then we go with it till we get here, and the price starts to go sideways. So in this case, this will be one trade, and then you can take another trade. As you can see, we see a pin bar here, which is at our previous support and resistance level. Pin bar, engulfing candle, you can take another entry, and then you get to next support and resistance level. That's when you notice that the price starts to go sideways. At this point, time to get out of the trade. And actually at this point, we could even take another trade if we wanted to, but that's beyond the point. But this is how we would take trades. So this is a double top, again, a 1-hour chart, very nice trade setup. This is our evening star. This is Aussie US dollar 1 hour chart. As we can see, price goes up, gives us an indecision candle, and then a nice wick at the top, nice bearish candle, giving us an evening star formation. So once this happens, we look for a bit of a pullback and we enter the trade short. And as you can see, here's these are my pivot point lines. It goes into the pivot point, pushes off of that, and then continues on right into the daily pivot here. And that's where we start getting a lot of pins on both sides in both directions, so time to get out of the trade. In this case, Aussie and New Zealand don't tend to move as much. As you will notice, euro or the pound will move. So in this case, we have 85 pips in the trade, but we stayed in this trade for quite some time, and we get $850. So the good thing about trading from a 1 hour chart is that we don't need to take trade every 5 minutes. We can take trades we would look for a trade setup every hour. So let's say we are trading the New York. If you're trading the New York, like I've been doing, what you would do is look for the trade setup at, first of all, you don't want to trade early in the morning or the opening of a session, because we won't have the time to sit there and watch the price action. There's a lot of news that comes out during that time, so that's not the best time to look for a trade. So you would, once the news is over, generally around 9 a.m. Eastern, most of the news is generally out of the way. That's when you would start looking for trade. So prior to that, that will be the time to take a look at your Forex factory, make sure you look at your news and everything, understand what happened in the market in the London session, take a look at if there's any other news that's supposed to come, let's say at 10 a.m. Eastern, we would need to know about that, because that would have an impact on our trade. If there isn't any big news coming out at that point, you can take a trade if there's a good trade setup. So we would look for a trade for at 9, 10, 11 a.m. Eastern. So those are the 3 hours. So we would spend about 5 to 10 minutes looking for the trades on the 1 hour chart. So first we will look at our daily chart. Once we have found the direction, we would then go to the 1 hour chart. There will be pullbacks, or there may be other trade setups like we looked at here. So we're spending 10 minutes looking for the trade setup that we want to get into. So you're basically asking yourself the question, is there a pin bar at the 1 hour? Is there an evening star trade setup, or is there a double top formation on the 1 hour chart? If you see that, then look for a slight pullback, or you can just enter the trade right here. Put your stop above the high and have a target. Set the target right then and there. Don't be greedy, because we are trying to minimize the amount of time we have to spend in front of the computer. So set a target that you would be happy with. For example, if I'm trading one standard lot, I'd put a 40 pip target or 50 pip target. Something, if I don't have time to come back to it, look for a target that you are very sure the price will hit. So that way, if you don't have time to come back and manage the trade, that's okay. If somebody like me who can come back and adjust their profit targets, or you can kind of pull them back or adjust them, then you can have a larger profit target. Or another way to do this is have a larger profit target and then pull it back. So basically we will monitor our trade on the hour, and that's the amount of time we will spend. So we are only spending about 10 minutes every hour looking for the trade, or if you have a trade on already, you're going to monitor the trade on the hour. That's it. That's all the time you're spending looking at your charts. So stay away from the charts in the meantime. So because one, you're busy, you don't have time, and second, I find people will fiddle around with the charts too much and take too many trades. And I have found that higher the number of trades you take, so higher the frequency of trades, the lower the profit. So so that's a correlation that I have found. And if if you want to be profitable and don't want to spend too much time, don't look at don't look at your trade in between, because then you'll have the urge to fiddle around with it. In this case, we know how much risk we are taking. We know where our profit target is. Just stay with it. And then you can, another thing in terms of trade management, you can pull your stop with you. So once you get 20 pips in your stop, in your trade, pull your stop to break even +2. At that point, you know you will have a profitable trade no matter what. At least you made 2 pips. So that's something to remember. So this is the way we can minimize the amount of time that we spend looking at the charts. So there's a question from Brad, what about weekly and monthly pivots? Brad, you can absolutely use those pivots. So this is one strategy, right? Keep in mind, this is one strategy. There are multiple ways to trade Forex. There's millions of ways you can trade Forex, and you can do so profitably. So this is if you don't have a lot of times, and this is a question I get from a lot of people. That's why I thought I would address the question, because a lot of times people will ask me, hey, I have a full-time job, I'm not able to look at the charts all day long, or I can be in front of the charts. So this is to simplify things. So when we simplify things, we're not looking at a whole bunch of things. So we just kind of really just focusing on very few of the variables. But yes, I do like pivot points. So if you have weekly pivot points or monthly pivot points, absolutely, you can use those because price will tend to either, turn around at those levels, or it will have problems at those levels. So you can use anything else. Like I use price action, but you can use moving averages if that's what you like to use with your 1 hour chart. The point would be, though, to minimize the amount of time spent. So you're looking at your chart on the hour as opposed to every 5-minute candle. So that's what we're looking at. In terms of the win rate for this, I have found it to be about 70 to 75%. I found when I take the better trade setup. So when I trade, I cannot trade every single bar on this chart, for example. That doesn't work. So that's why when I look for the best trade setup. So for example, the pin bars, my rate for pin bars is quite high. It's over 80%. 80% of my trades that set up on a 1 hour chart using pin bars at important support and resistance areas pay me. So that's pretty good. And also what I found is win rate is one thing, but also risk to reward ratio. I find my risk is quite small in these cases, and my reward tends to be much larger. So when I trade from a 5-minute chart, I'm looking for 20 to 40 pips in the trade. When I have switched to my 1 hour chart, I'm finding my profit targets are actually further away. So I can make about 100 pips or 90 pips or 80 pips. There are more trades that will pay me that as opposed to the 5-minute chart. So those are some of the observations just from myself. And then Joe has a question. Would you look for pullbacks during Asia and London session? I would look for pullbacks during Asia. In London session, generally you tend to see a move at the beginning of the session. London open, you tend to see a move in the opposite direction, and then you see a move in the direction that we want to see, the direction of the trend. So that would be an indication. So in the London, I'm looking for trade in the direction of the daily bar, not against it. In Asia, it will tend to go against it, pullbacks more in the Asian session, and afternoon in North America. So I tend to not take trades after 12 o'clock. That's another thing I found. If I'm trading after 12 p.m. Eastern, you're looking for pullbacks. So in the afternoon, generally you will see pullbacks unless there's a very, very strong trend. In general, though, you'll see pullbacks will start to happen come around 2 o'clock Eastern. Between 2 to 3, you will start the market pulling back, and then till 5 o'clock, generally it pulls back and continues on in the Asian session. And at some point in the Asian session, it will hit a high or a low. And then in the London session, the trend will start again for the day. So in terms of how we trade, we'll see that the price will go in the same direction generally. Again, we're generalizing a lot of stuff here. Generally, the price will continue in the same direction for 3 days in a row. So what I've noticed is price will, let's say on Tuesday, it picks a direction. Mondays, I tend not to trade just because a lot of times you'll get very small range bound markets. Price doesn't go anywhere, it goes up and down, doesn't really chops you out. So I've cut out Monday trading completely. And Tuesdays, I've noticed generally when the trends kind of start to form, you'll get a nice get a nice start of the trend, then you'll see consolidation pullback. This next day, the price will go in the same direction, and then another pullback, and then price continues in the same direction. And generally, it tends to happen over 3 days. That's what I have noticed. So keep that in mind. So there's another question on how much stop loss. In terms of pips, it depends. Okay, and really, what I look for on the 1 hour chart, first of all, the stop loss would be bigger than on a 5-minute chart. So you cannot have a 5 pip stop loss, because if you put a 5 pip stop loss, it will get hit for sure, because generally the price will pull back up. However, the way I look for stop losses is, for example, in this example here, I would place the stop above here. So take your pip and add another, take the high and maybe add another 5 to 10 pips on top. That will be your stop loss. So you could have a stop loss that's like 30, 40, 50 pip stop loss, depending on how much you're expecting the trade to go. So let's say you want to stay in the trade for let's say you get in the trend at the beginning of the first day, you have your stop loss, 30 pip stop loss, and you're looking to get 100 or some pips out of that. That's fine. If the trade has room to move 100 pips, that's good to have that profit target, and your 30 pip stop loss is not bad. However, if the trade only has 20 pips to go and then you hit a major support and resistance level, that's not a good trade to take, because you don't have room for the trade to go that much. So that's what I generally look for, not so much how many pips here. I'm looking for where is the high, and I want to put it above that high. So if I'm trading an engulfing candle, for example, let's take a look at this here, for example. This is an engulfing candle. In that case, my stop would be above the engulfing candle, and it would be a little bit higher than the engulfing candle in case price goes and tests that level again. That's what I would be looking for. So I have other questions coming in. Let me try getting those. What Eastern time is best for hourly trade setup? I would start looking for trade between 9 to 12, 9 a.m. Eastern to around 12 a.m. Eastern. If you're looking for reversal, it will be between 2 to 3 p.m. in the New York session. That's when the reversal happens. Before then, 9 a.m. is when I would start looking for trades. Prior to that, I would be at my desk and do all my morning routine, basically looking at Forex Factory and news feeds and stuff like that prior to that. So before I enter into a trade or look for a trade setup, I want all of that morning stuff done out of the way, which is your analysis. Another question, do you suggest using moving averages with the 1 hour pin bar strategy? I use the pin bar on its own. Moving averages are nice to use when you want a visual indication of where the market is likely to go. So then you can use the moving average crossover when you're when the moving averages crossover, you can take a trade. So I don't use moving averages with the pin bars. You can just use them for otherwise just to get a direction. GMT times, you would have to pull. I tend to think a lot in terms of Eastern times. So you may want to just, there's a time conversion thing online. I think it's called timeconverter.com. You can go and take a look at that. I tend to think a lot in the Eastern time. So my apologies. I'm not sure I can answer that question. Okay, Walter, in general terms, what would be the lot size for 10, 50,000? Okay, I tend to use an example of when, this is what I found. When I trade, when I have a $10,000 account and I'm trading one standard lot, it's a viable thing to do. When I have traded a $5,000 account, I put $100, a full lot on there. It doesn't work too well for me, because if I hit a few losers, and that's something to keep in mind, you can hit a few losers in a row. It's normal. It happens. It's like saying, hey, somebody, let's say NBA star, will always get the ball into the basket. It doesn't happen. You can have multiple throws that just won't, you're just not being able to hit it. That's fine. So you can have a losing streak. So what do you want to make sure? You don't want to lose your account during the losing streak. That's the most important thing. Our account is our business, right? If you lose your account, you lose all the money. And trust me, I have done this. I have blown a few accounts. So when I tell you things, those are things I have learned the hard way, stuff that I'm sharing with you. This is not stuff that you get out of a book. So this is like hard learned lessons, and I suggest you don't repeat them. However, you are going to blow a few accounts, so be okay with that. That's why you don't want to blow a $10,000 account, blow a $500 account, so you get an idea of how it feels emotionally and everything else. But I have learned that when I trade a $10,000 account, I'm comfortable trading one standard lot without any problems. I don't have to worry about it. I don't have to look at my phone every 5 minutes. I can let it run. I can let the trade run. If I have a $5,000 account, I can have half a lot running, no problem. I can have a one standard lot running, but I find that I get anxious on that. So again, how much risk you put on a trade is a personal decision. So based on my experience, though, I would recommend, if you have $5,000 account, trade half a lot. What I don't recommend doing at all is to have a $500 account and you're trading a full standard lot. That is a surefire way to blow your account. And I have done that. So just based on personal experience, just because a broker is giving you 400 to 1 ratio, your leverage, doesn't mean you have to use it, because that's just a way to give them the money. So my little 2 cents on that. Nick has a question. Do you trade the strategy on all pairs? Yes, you can use this strategy on all pairs. I have tested it on multiple pairs. So if you see some of the examples that I have used here, here's another triple top example. So this is Euro US dollar, 1 hour chart. Oh, sorry, this is a wrong chart here, 15-minute. But it works on, this is Aussie US dollar, 1 hour chart, Euro yen, 1 hour chart. All of these, New Zealand dollar, 1 hour chart. So basically what I recommend is have a few pairs you like to trade, and when you do your run through on the hour or from in the charts, you're looking for these different, you go through each of the pairs and see if there's a trade setup, because there won't be a trade setup every hour. You won't find that, and which is good, because you do not want to overtrade, especially when you don't have time to look at your trades all the whole time. So I would say have a handful of pairs you want to trade, and on the hour, just do a quick scan of all those charts, and then you will notice, 1 or 2 pair maybe have a good trade setup at a good level that you want to trade in the direction of the trend that you want to go in. That's when you enter the trade. So just basically take pick the best trades. That's the whole point. Pick the best trade setups, let the rest go, and you will find just by doing that, your profit win rate will actually double. So when you're trading a $10,000 account, yeah, that's 1% risk. You're putting 1% risk on with if you're trading one standard lot. One standard lot means is when you have one pip, you make $10 on the pip. And Raj is asking a question: if it's a $500 account, can you trade 3 minis on that? Again, the risk is a little bit high on that, Raj. However, so I would say test this strategy either in Forex Tester or any kind of back testing software that you have, and see what your winning percentage is, right? So winning percentage may be different for different people, because depending on the amount of experience you have, the setups that you're willing to trade, my win rate may be different than yours, just because sometimes I may get out of the trade sooner, or I may let the trades run and things like that. So risk to reward may be different as well for all of us. So I recommend try this in a demo account, or try this in Forex Tester, and look at some data. See how much, which trades you're able to take using this, and then you can decide. So if you want a higher risk to reward rate, higher risk, if you want to take higher risk per trade, you can do that, right? Like on a $500,000 account, you can trade one lot. But that's after you know what your winning ratio or what your stats are, right? Your winning ratio, your risk to reward ratio, these things. So once you know you can comfortably take the trade, then you can put higher risk on, right? Like, I'm not completely opposed to that, but I'm just saying be mindful of that, though, because the problem is when you put higher risk on, it's easier to blow that account. Chris, do you any advice on improving trading psychology? First thing I would say is start taking less trades and back test, right? If you can back test and you know what your stats are, like how much, if you, for example, just taking a pin bar, right? How many trades do you win versus how many times you hit your stop loss? Just having that information will actually help you a lot. And then you'll feel more comfortable, because when you know if you roll the dice how many times you'll get the 6, then you'll feel more comfortable with it. Okay, so that's all the questions. So let's move on. So those are some examples that I have. Here's another example of a daily pin bar. When you have a strong daily candle, it is a nice trade to take, and you can actually stay in the trade for quite some time. So this one was 320 pips, which is very, very nice on the euro. Okay, so now there was a question about the trade room. Brad asked a question about the trade room. Am I going to do the trade room again? Not so much the trade room. What I have been working on, like I said, for the last few months, have been trading less and just trading from the 1 hour charts. So I will start a trade signal service, though, which means I will be trading, and I'll have a Skype room where I will post the trades. So I will share ideas on what pairs and what direction I'm looking to trade for that day, and where I'm looking to take a trade. And then when I enter the trade, I will send out an alert with this is where my entry is, this is where my stop loss and my profit target is. So I will be at my desk trading Tuesday, Wednesday, Thursday, every week. So that's when the trade alerts, you can expect to see trade alerts between 9 a.m. Eastern to 12 p.m. Eastern. So basically this is London after lunch, or for New York in the morning. So you can have Skype on your phone. I will also do Twitter. I'll put them in Twitter. And Twitter will just have the entry, stop loss, and exit. So just the signal itself. So the Skype room would be more to ask questions, where I will share my ideas and what I'm thinking and all of that kind of stuff. The Twitter, and I will put the alerts when I enter the trade with the entry and exit plus the stop loss in the Skype. And and then you guys can share your charts. You can ask me questions, or if I see something interesting, I can share my charts and all that kind of stuff. So all that would be in the Skype room. So that would be basically the medium of conversation. And then every Friday we will meet in person like this. We'll do a webinar which will be recorded. So every Friday in the morning, 9 a.m., we'll do a live session. I may not take a trade necessarily. If something sets up, we can look at it. However, it will be more to do a review of what happened during the week, what kind of trades we took, what could we have taken, and to answer any questions. So that will be more of a won't just be in a webinar format, so that will be more where you can speak, where you can ask questions, where you can ask questions of me, and you can come on the mic if you want, or if you just want to put questions in the chat, you can do that. And I will do a lesson as well. So this will be just for members only webinar, not for everyone. So there'll be a lot more teaching in that as well. So we'll pick one topic and I will dive deeper into that. And I will also send a weekly market overview videos. I'm going to change those a little bit and start sending out trade ideas every week. So whether you sign up or not, so this is something that will be shared with everybody. But so I will maybe share one trade idea in the weekly market overview, but in the Skype room, we'll have, I'll share our market ideas on a daily basis. So I'll say, okay, I'm looking for euro to go down or up or whatever the case may be. And this is why. That's our type of stuff. And of course, I'll give you my pivot point indicator because I love trading the pivot points. So I do feel like you should have it if you're going to join me. And the price of this is $47. I will be putting it at $97. I think on the website right now it is $97. So this is a promotion only for this week. After that, I'm gonna go to $97. So this won't be available anymore. So this is just for now, just because I'm launching it. And I find that when you have a few people in the room, it's kind of nice. It creates a nice vibe in the room. So yeah, so it'll be $47 per month for this service. So you basically get my trade signals, my trade ideas, and you also get one teaching webinar where I will go through either it'll be a particular trade setup or, based on what everybody wants to learn about, I'll basically teach you. And there's another option. So that's one option you can do. Or if you haven't taken my course, I highly recommend it because all the stuff that I talk about here, the pin bar, double bottom, triple top, all that kind of stuff, in the trade room, I won't necessarily have the time to explain what a bullish engulfing candle is, what a bearish pin bar is, what's this, what's that. So I will do trade signals, but I may not have time to go over everything. Basically teaching, I will teach once a week, but if you want like a step-by-step way of learning, I recommend looking at, and when I talked about like my morning routine, so that all of that stuff, I pay a lot of attention to in my course. So generally my course is $497. It's on the website right now for $497. And the trading signal service at $97 a month would be about approximately $1,200. I kind of rounded it off. So this you're looking at about $1,600, $1,700 a year for this. However, today, if you are going to sign up for it, you will get it for $564. So you would get 1 year of signals, plus you will get my course for $564. So basically for signals, you're only paying $64 for the entire year. And this is a promotion that actually I will take off next week. We're not going to keep this because it's not, it will not be viable. But for now, because I do want to get things rolling and I'm really excited about this year, I've been putting a lot of work into this. Last year was a little bit difficult for me. I had some personal family problems and so forth. So this year, thank God, everything is good now. We're back on track in terms of the whole the health stuff. So I'm really excited about this year. I've been putting a lot of work over the holidays and over the last couple months, really focusing on honing down on this process. And so I'm really excited to get started on that. So we will start, the signal service will start this Tuesday, 9 a.m. I am going to be at my desk. Before then, you can sign up. So to sign up for this, for just the signal service, you can go to tradingwithvenus.com signals promo. /signals promo. That's only for the signal service, which is $47 a month. And you can stay at $47 a month as long as you choose. But once you stop, then that price won't be available anymore. Just after this week, the price will be at $97. So, but once you sign up for $47, if you're, if it's here for 2 years, you will get the same price. The price won't go up regardless of what price currently I would be selling the service at. And if you wanted to get the course, you can go to tradingwithvenus.com /Forex video course. That one will give you the Forex, the video course, as well as the signal service for a whole year for $564. So all right, perfect. So if there are no questions, so if you would like to join me, I would love to share my knowledge with you and share my signals with you. You can go to these you can go to these links and you can sign up. So tradingwithvenus.com /signals promo, or you can go to tradingwithvenus.com /Forex video course to sign up for the course as well as the signal service for a year. So that's all for today. So in the coming year, I will have a lot more webinars and we will go through some more stuff, and we will cover that. I actually I don't sell the pivot point indicator, so I don't have a price for that, unfortunately, guys. It's just something that I give as a bonus if you sign up with me for a course, or you sign up for my service. That's just something that I give as a bonus. I don't really charge. And Walter, yes, there will be new Skype room. So anybody who is going to sign up for the signal service, do send me your Skype ID, because I do need that so I can add you to the room. And Patrick, yes, I believe it didn't come through, so you may have to do that again. So we are going to start this Tuesday. And before that, this weekend, I will send you a weekly overview, and then we will actually start taking trades from this Tuesday. The liquidity is a bit low over the holidays, so that's not the best time to trade, because either the market will just become range bound, or we can have these long drawn out sort of trades where, or market moves, I should say, where the price just kind of takes off, and but it's not good, because the next day it could go in the opposite direction, and it only happens because if any big order comes in, it will have a huge impact on the price, which is not a good way to trade. So price is very unpredictable over the holidays. So that's why we waited till the liquidity. Now this week, the liquidity will be back, and we'll be able to start trading. All right, so I think, so that's it. So once again, my apologies for starting a little bit late. So I need to look into this a little bit more here. It's a new software. We may just go back to the other software that we were using. It was quite reliable. So I will look into that. But for now, Happy New Year. Welcome to 2017. And I look forward to working with all of you guys, whether you just attend my webinars or you look at my YouTube, the podcast. I do share one trade a day. So whether you look at that or you look at my weekly overview, whichever way you choose to be with me, I really appreciate that. Thank you for supporting me in this. I find if I connect with people, whichever form that may be, whether I'm teaching, paid or unpaid service, I really appreciate it, because the more I teach, the better I do. That's what I found. That's another thing. That's why I actually started teaching, because my trading goes better as well when I'm teaching. So anyway, so that's it. We'll get started with more webinars. You'll see I'll list the webinars on the webinars page on the website, so you can go. We'll do a webinar every other week for these webinars, and then every week for our trade room webinars. But overall, you'll see a lot more webinars. So I'll be teaching a lot more. That's it. Jesse has one more question. Can we share emails as a group? If you're part of my Skype group, yes, you will have a chance to talk to other people, share emails, share ideas. Actually, I highly recommend having a trading buddy because it will help you stay accountable, help you stay on track. You'll be able to share ideas. So that's one of the reasons I am wanting to have a very interactive Skype group. So going forward, we'll have a very interactive Skype group. So I highly recommend sharing your thoughts, sharing your trade ideas, and you are welcome to share stuff with each other. I am not on WhatsApp, unfortunately. So, or I don't like using WhatsApp. So I only do Skype Room. I just find it easier because my Skype is everywhere with me. Otherwise, it becomes like I have too many ways to connect, and it just takes my focus away from what's important. So question about, based on historic records, how many percentage of winners and losers? So Jagnish, it's an interesting question because I go through times when I'm on this really, really hot streak and everything I touch is just good. I seriously take a trade and it's like, whew, this is nice. It's just a streak. I just hit. Like my winning percentage will be like 95%, really high. And there are other times when, for the life of me, I cannot get trades. So it doesn't matter where you are in terms of your knowledge and experience. What you have to do is when you hit a few losers, you just bench yourself, stay out of the market, reassess, and then get back in. I find, so I go through these periods where, there'll be times when everything I touch works and it is really, really hot, and other times when, oh my God, trade will go 20 pips in my direction and then it'll take me out with a stop. I'm like, what the heck? So that tends to be the overall. But I will, well, if you join the Skype room, we will have the whole track record for everybody to see. But I think I'll do a little slide with share some results and stuff like that. More important thing is, what do you learn from your trades, and what do you apply taking forward? So this whole 1 hour thing has been kind of my review of the last year and lessons that I've learned. And one of the lessons that I learned is that I need to trade less, because I don't have the more I trade, the less my winning percentage. So, all right, so let's call it a wrap, and I will see you guys later.